Hello everyone, welcome to Bald Guy Money. I am Bald Guy, and if we take a look at the top 10 assets by market cap today, it's clear to see what a big role both gold and silver play in the global economy. They are two of the largest asset classes when we exclude real estate and the bond market, a fact that's been true for thousands of years unchanged and not likely to change anytime soon. But despite gold and silver having basically guaranteed spots amongst the most coveted and highly valued assets in the world, the weight or percentage they make up of the top 10 changes. And as you can see in this image here, gold, if you add up the total market valuations of the top 10 assets, is currently 45% of that total value, with silver being about 5% of that total value, meaning together they are 50% of the entire value of the top 10 most valuable assets in the world and worth as much as Apple, Microsoft, Nvidia, Google, Amazon, Saudi Aramco, Bitcoin, and Facebook combined. But that figure is nowhere near its peak, because if we go back as recently as the end of 2020, gold and silver were a combined 62% of the value of the top 10 assets in the world. And with the stock market putting in major reversals this week, I mean, the Nasdaq fully gave up 2 weeks of gains and then some, you can't help but wonder if this is the start of a major pivot for investors towards gold and silver, making them even more expensive than they are today. So with that, I want to explore the consequences of this shift and show you all how gold and silver are becoming increasingly unaffordable for the average person, and why having as little as 1 ounce of gold and 50 ounces of silver is actually a significant amount. After that, I want to explore where the price of gold and silver are likely going in an environment where their dominance amongst the top 10 assets is set to go up, and I'm going to finish by answering 2 viewer questions in this video. So let's not waste any time and start with a quick stat I first presented back in March of this year that showed 44% of Americans, citizens of one of the world's wealthiest nations, cannot afford a $1,000 emergency at all, even with the help of credit. What's worse is, if we dig a bit deeper into that data with some newer data I took from Forbes, it shows us that nearly 70% of Americans do not have $2,000 in savings, which is less than the value of 1 ounce of gold at spot price right now, and nearly all of those people, by the way, are living paycheck to paycheck. Of course, this is awful news, but it's a global issue as people continue to grapple with the consequences of a higher cost of living, stagnating wages, and increasing unemployment, all of which have driven the American personal savings rate all the way down to 3.9%, as you can see right here on this chart from the Federal Reserve, meaning the average American making $60,000 per year after taxes is only able to save $195 per month. And that's probably why, in the face of rising gold prices as central banks look to position themselves for the next round of US money printing, gold is becoming less affordable for the common person, with only 28.5 ounces of gold now equal to US annual personal income per capita, and that is lower than the last time I showed this number back in March, and getting closer to the disaster stagflation levels of 1980, which was 17 ounces of gold. And to those of you who are convinced it's not so bad since we're still very far off those 1980s figures, consider this. If we factor in the savings rate I just showed you all, which is what people are able to put away as a percentage of their net income, you can see here that what people are able to save in gold today at a 3.9% savings rate is already much lower than what Americans were able to save in 1980, with an 11% savings rate at 1.1 ounces of gold today versus 1.87 ounces of gold in 1980. And just to add a little context for you all, that is when the price of gold in US dollars was literally at its highest level ever, adjusted for inflation at $2,738 per ounce in today's dollars. And this data confirms without any doubt that gold is not only unaffordable for most people today, but that more and more people are going to find themselves in that group of people who are priced out of the gold market as we progress in what I would call a recessionary bull market where prices are going up while people are losing their jobs. Now, in the case of silver, you can clearly see here that we are on a similar path. It is slowly becoming less affordable, with the only major difference being that it is still more affordable when we factor in the 1980 savings rate. But if we continue to move closer to that 1980 level, just as we have done in the case of gold, once we reach parity, moving from 91 ounces of silver to 56 ounces of silver, it could mean we will see the price of silver reach $47.45 per ounce as a minimum, all other things being equal, and I believe that is the direction that we're moving in right now. Now, this data tells us two very important things that can guide us in our stacking today for both experienced stackers as well as new stackers, and I'm going to cover that in a moment. But just before I reveal that, I want to introduce you all to the sponsor of this video, a mining company we've discussed before here on the channel, and that's Alaska Energy Metals. This is an opportunity that revolves around nickel, a metal that is important for future technologies in the green energy revolution, and as you can see on the right side of the screen, is becoming extremely critical with high supply risk. Supply risk driven by the fact that China and Indonesia, who control roughly 71% of the world's nickel supply, are trying to corner the market by dumping nickel as they try to acquire the few Western sources at low prices. As a consequence of that, Alaska Energy Metals is currently trading at its cheapest level ever, meaning for long-term investors, and that's what they're trying to attract, and it's why they've sponsored this bit of my program. For long-term investors, there has never been a better time to pick this stock up, as it is currently trading around 10 cents a share, but has traded as high as 36 cents a share just this year. And with the United States and Canada moving to protect Western nickel mining by implementing tariffs on Indonesian and Chinese nickel, this company has the potential to get back to that level, especially if we consider that it is valued significantly lower than some of its North American peers who have attracted a lot of institutional investors, including Jeff Bezos and Bill Gates, both of which have invested in Cobalt, a company that uses AI to identify the best places on Earth to mine nickel and is operating, as you can see in this image here, literally right next door to the Alaska Energy Metals Eureka mine. So if you're interested, check them out at their website to learn more about what they're doing, and that website is alaskaenergymetals.com. Their ticker symbols are also right here on the screen, and I want to thank Alaska Energy Metals for sponsoring this bit of Bald Guy Money, because I wouldn't be able to do what I do without great sponsors like them. Thank you. So, as I was saying before the break, the data we've looked at tells us two very important things today. The first thing is, and it's something I've been talking about here on the channel for a while now, and probably why we're seeing silver outperform gold so far in 2024, and that is that silver is still relatively undervalued versus gold, and I fully expect to see the gold to silver ratio tighten to anywhere from 40 to 60 ounces of silver per 1 ounce of gold, at least for a short period of time over the next few years. And the second thing this data is telling us, if we look at the data as a whole, so I'm talking about the numbers from 1980 combined with where we are today, having 1 ounce of gold and 50 ounces of silver represents nearly 2 years of savings for an American, and likely more if you're watching this somewhere outside of the United States, based on the annual income per capita data multiplied by the average savings rate. And I know it might not sound like much. You may be saying people in general are bad savers, so it's nothing to benchmark to, but I will say this. These numbers illustrate in a very simple way how a small amount of gold and silver can put you way ahead of your peers and not only get you on the path to being financially prepared by setting a modest stacking target, but also position you to tangibly benefit from the ongoing silver and gold bull market, which, according to the different models I've shared here on YouTube over the past few months, and yes, I put them all together here for you to give you an idea of how these models average out, they show us that we should see US dollar prices of metals in today's terms, more or less, rise by more than 50% as people seek shelter from a stock market that is starting to move downwards and all the credit risks that come along with that fact. Now, just one thing I want to clarify before we move on to this video's viewer questions, and that is the fact that my silver price target, which is at $60 per ounce by 2026 based on different supply and demand factors, remains unchanged despite these numbers here that I'm showing on the screen right now. I just wanted to make sure that everybody knew that so I don't see those questions in the comments section. I wanted to answer that in advance. And with that said, it's time to move on to this video's viewer questions. And as I said at the start of the video, I have selected 2 viewer questions for this video, and it might be something I continue to do moving forward. And if that's something you want to see, please let me know in the comments section. And just as a reminder before I dig into this, you can submit your questions in the comments section of this video and any video I make. I select at least one question now to appear in every video I do, and yours may be next. And this first question comes from the Commander. And the Commander wants to know, if gold and silver are priced in US dollars, how will someone value an ounce of silver or gold after the US dollar collapses? And that's a great question. And it's times like this I like to remind my viewers that the US dollar, like any fiat currency that has existed throughout history, is not a measure of the value of gold and silver, but gold and silver, more specifically gold, is actually the measure of the value of the fiat currency. And I've pulled up some examples of Greek, Roman, and Parthian coins, all of which I collect, to show you that gold and silver can function perfectly well as a measure of value, a medium of exchange, and a store of value with or without the US dollar, as these predate the dollar by more than 2,000 years. And as I've shown you in a recent video, the modern human's obsession with trusting authorities to issue fiat currencies means, and we've seen this countless times as different fiat currencies have failed throughout history, is that the US dollar will most likely be replaced by some other currency someday. Who knows when in the future? And the gold and silver you are holding will be used as a measuring stick to determine the value of that new, most likely, fiat currency, not the other way around, meaning that whatever you have stored in gold and silver is safe from that situation, whether it happens in our lifetimes or not. So thank you, Commander, for that question. And now on to the next one, and it comes from Mario Kali. And Mario wants to know what I think the best way to buy gold and silver is. Well, Mario, if my latest actions are any indication of what I think is best, and my Patreon members will know that I recently purchased 20 ounces of silver maple leafs, I think having the physical is the ultimate fail-safe against the exact situation I described when answering the Commander's question. And once again, I'd like to take an example from ancient history. I am an ancient history buff, specifically ancient Rome, but this practice wasn't unique to ancient Rome, and it still exists today, and that is the practice of hoarding. And no, I'm not talking about people who refuse to take the trash out that you may have seen on television. I am talking about people who collect sound money, real money, gold and silver, and in history, at least in Roman times, hid that money away to protect their savings against the devaluation of the circulating money. And the devaluation of that money happened via a process called debasement, which is beautifully visualized in this image here from the Visual Capitalist that shows a clear correlation between the decline of the Roman Empire and the debasement of its currency. And if we switch over to a similar image tracking the value of the US dollar, you can see now why I use this example. And it's because if you're in it for long-term protection, if that's what you're looking for, if that's why you're entering gold and silver, having the physical is clearly the only way to eliminate counterparty risk. Because if the day comes in our lifetimes that we see hyperinflation, and people who are watching this video from Turkey and Lebanon have seen that situation, or from Venezuela, or from Zimbabwe, they've experienced this. Or if we see an all-out failure of the US dollar, the people on the other side of your ETFs, your SLV, your GLD, and your bonds, because you mentioned bonds in your question, will want to settle your account in something, that something is US dollars, that no longer has any value. Now, if we're being completely honest with each other and cutting some of the doom and gloom junk, this is something that I don't expect to see in my lifetime, and it's why I still invest in mining stocks, and I sometimes make the occasional trade on the gold and silver paper markets when I see the opportunity to make some money there, because I think ignoring the reality that we're in is simply foolish. But what this does mean is if I really get into a pinch, or if computers go down as they did this past Friday, I have something that will get me out of a jam if I need to purchase something. And I don't have to rely on anything else except for more than 2,000 years of history confirming that people will accept both gold and silver in exchange for things. So that's it for this video. Thank you all for watching. I sincerely hope you enjoyed the data and some of the takeouts that I've shared in this video. Please let me know what you thought in the comments sections. Leave a question if you want. Maybe I'll answer it again, as I said, in the next video. And if you liked it, please remember to leave a like, share this content with people you know, and remember to subscribe if you want to see more of my content in the future. And until the next time we see each other, everyone, take care of yourselves and take care of each other. Goodbye.